under control. Margins start to tick back up. You start to get now toward 20% gross margins. I think this is the start of the stock ultimately. This will have a 3 in front of it as a stock as the gross margins start to trend up and as well as growth into next year from a delivery perspective.
So does the robo-taxi stuff matter?
Look, I think longer term, we think the longer term story here is autonomous.
Thanks again for joining us. The focus, obviously, of our talk today is increasing earnings gap at Tesla, improve stock price, and as you saw from Dan Ives, the big guys see Tesla above 300 heading for 350 if we see a continued growth in those margins. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If this is repeat visitor, welcome back. We also want to thank those of you who choose to like, subscribe, and make a comment. It definitely affects degree of viewer interest, etc. So one part of the show that we have not been doing a lot of recently is focused on sort of investment and investment returns. We often talk about the fact that there are kind of two major constituencies. Obviously, there are hundreds, but two majors that we'd like to discuss today. One constituency is the hedge funds. They want to know immediately after earnings, were things good, and particularly if it's followed up based on number of vehicles sold, stuff like that is appealing and therefore generates an immediate jolt to the stock price. The next group, which is the larger group of investors, has a totally different perspective on things, where they're definitely focused on a short term in terms of how the company's doing, but there is actually a longer term perspective that's going on to determine will they buy more shares or encourage their investors to sell what they have. And clearly, the trend on margins is a huge deal for Tesla in this case. So I wanted to review with you sort of a few thoughts surrounding this sort of earnings beat. So the first item I'd like to review is sort of growth process and how and why stock prices tend to rise. So for today, I'm going to use this prop that you've seen us use before. And in essence, what it is, you can see, is we have the semi-truck from Tesla, and we also have the car. This should actually be upside down. And the reason I chose to use this today is that there's a stair-step process for the growth of any stock. Typically, what you have happen is, in the case of Tesla, we had the Model S, then we went to the Model 3, very well regarded. Now we're sort of in the era of the Cybertruck. There's a lot of question marks about its growth, but it's still selling units and beating out a lot of other entities that should be drawing those sales, especially with a $100,000 plus price tag. But nonetheless, this is adding to the revenues and the profits are there to go with it. Now, typically, if you're going to get a dramatic jump, we're talking 25, 100% in a very condensed period of time, both having that next stage product and in essence a guaranteed when it's going to deliver numbers is where you get a huge push in the stock price. In the case of Tesla, in this case, we're not seeing that. We've often reviewed the fact that the way you determine what the stock price is you take earnings times the growth rate. So if there's no growth, you have a very low stock price. If there is growth, stock price accelerates faster. The other key issue here, though, is if you do have earnings, are those earnings increasing or declining? I.e., are your margins increasing or declining? So in this case, Dan Ives pointed out that, yeah, we were expecting something around 14% gross margins. The reality is they came out with 18.5% growth margins and what seems to be rising. So there are different ways that Tesla arrived at this. One of those ways is that there are a large number of manufacturers who've sort of hit a wall. And in the case of GM and Ford are examples. Ford, for example, has chosen to suspend until first month of the year production of its Lightning electric SUV. What this has done is screwed up the supply chain process. So if you go online right now, I spent a couple hours yesterday sort of reviewing video of what's going on in China for the major battery manufacturers, including Cattle. So Cattle announced that they were suspending production for 1 month. But I have to admit that I did not know about the fact that what's actually been going on is Cattle is a big name supplier of lithium-ion batteries, but an entire industry of small, medium, and large players relative to these batteries are in a world of hurt right now. So as a result, they're selling at or below costs just to keep their production flowing. So this is actually really good news for Tesla because they need those batteries to put into different entities. And the lower the prices go on those batteries, the higher the profit margins are for Tesla. So I wanted to review this today because it kind of explains, number one, yes, Tesla's margins are growing, but we could add to that growth in margins by saying, not only are the margins good now, but they're expanding, and in essence, being sort of the principal place around the world where people are going to be buying your vehicles. And, you're in a power position right now relative to the cost of goods sold, which is exactly where Elon wants to be. So one of the questions that comes to mind is, how long is this going to last? Well, I do believe that we're in a situation right now where we're going to start seeing bankruptcies of smaller players in the lithium-ion battery world. But it's a very, I want to say, strange world. The reason is that China has a process that they're doing right now. They are eagerly hunting for places to shift their productive capacity that will provide jobs. So as a result, let's look at solar panels, and in this case, the batteries. There are a lot of machines, people, etc., that go into the production of batteries and even production of cars. And the challenge that China has is large amounts of unemployment creates other problems in terms of angry folks who are trying to overthrow the government. So as a result, if you have an application that represents a potential large job producer that helps eliminate a lot of unemployment in China, not only do you get the money for it, but you get large amounts of that money at very low interest rates because they're really in the process of job hunting. Obviously, this is a problem for countries outside of this area. So like 90% of the batteries now are coming from Chinese manufacturers as a result. But from one angle, this is called dumping because they're introducing product at very low prices that are below the cost of competitors. On the other hand of this whole thing, there's a concept called we need the jobs, and we in essence are buying jobs by offering product at costs to keep our factories moving. There are these, as you know, all these benefits of being a low-cost producer in that you can push all your competitors out of business, and eventually, as those competitors are out of business, you can then come back in with higher prices when there's no competition to be had. So as a result, as we all know, these type of products and vehicles have drawn tariffs in the United States as well as in the EU. And I think those will be maintained and obviously potentially increased as well. So overall, congrats to the folks at Tesla on generating these great margins. It's nice to understand better why that is the case and can this continue, and perhaps how long will this continue. And the answers I'm coming up with, yeah, it can continue to higher margins for Tesla. They can lower prices in order to attract more customers. And their bargaining position is amazing right now against companies that may have to go out of business if they don't have customers for those batteries. So hence, I think that applications like the semi-truck and other things will benefit from this transition in terms of battery severely falling in price. And until we have the bankruptcies that need to happen, which are starting now, I just think that a 20% margin for Tesla is available, and you can see the potential impact on the stock as that occurs. So I want to thank you for taking time out to review this, how things are going for Tesla relative to gross margins and impact on stock with us. Next, we'd like to go on to our health tips. We're just a reminder, don't forget your 25 leg lifts a day to strengthen the quad muscles and reduce knee problem potentially. Also want to encourage you to consider a 20-minute walk each day as a way to help endorphin, but also another health measure once a week for fried foods, and maintaining same sleep and wake times on a daily basis as a way to create a healthy sleep etiquette circadian rhythm. At any rate, want to remind you, please take time to like and subscribe, and any comments is greatly appreciated. This is Greg for Teslafaninsight. Tschüss, au revoir, la hit road, hoda, la ni hao ma. In Jamaica we say, enough respect. Thanks for joining us. Have a great day, and bye for now.